Hey guys, what's up? Spenny here. So a little bit of a different setup today, as you can see. Same room, different corner. Let me know in the comments what you guys think of it. Really simple, just something a little bit different. And yes, that is Punisher in the background. Almost done the second season. Highly recommend the TV show. Anyways though, so in today's video, I want to talk about IDEX. IDEX is one of the most requested videos I get from you guys. The ticker symbol is IDEX. Now this is only a $3 stock and it's very speculative. If we look at the chart over the last 5 years, you can see it's very volatile. I can see why there's a growing interest in this stock. It's really getting a lot more popularity in the YouTube community, and for good reason. I think that this company is going to do really well over the next 10 years. If it does perform, I think it's going to be a multi-bagger stock. It hasn't yet proven itself, so I think there's a lot of upside here. Now getting into what the company actually does, it's kind of confusing if I explain it, so I'm going to play a quick 30-second clip of the CEO. He can explain it a lot better than what I can.
Today is Alf Poor, CEO of IDEX. Alf, it's great to meet you.
Thank you. Great to be here, Christine.
Tell me a bit about the company, because I understand it's going from a shift from a logistics management company to a global fintech company, headquartered here in New York and then offices in China as well. So tell me more about it.
Yes, correct. Yeah, so we're, as you mentioned, we're a global fintech company. We're doing some exciting stuff in AI and blockchain. And as you said, we do have a large presence in China with offices in Beijing. We've got ourselves into some very interesting areas in the fintech space, namely AI for helping banks and others. But more specifically, our crown jewels at this time is our activities in the financing for electric vehicles in China.
Okay, so IDEX is a global company driving mobile energy transformation and the green fintech revolution. See, if I were to read that to you guys, you'd probably be like, what does that even mean? That's why I had the CEO kind of explain it to you better. But anyways, getting into why this could be a good investment, they've made some really good deals lately. It says here, IDEX signs a definitive agreement to acquire Utah-based wireless charging provider Wave. I really like this deal. So this company is focused on wireless charging systems for commercial EVs. Now, most of you guys know I'm very bullish and highly on, and in a couple of my videos I've talked about how there isn't enough charging infrastructure for commercial vehicles. Clearly Wave is working on this, and I think that this is a huge opportunity. Now, I don't know much about Wave, so I don't know how well positioned they are, but they're getting into the right space. So I like this deal, and there's a few other deals I want to show you guys that I'm quite bullish on as well. The next one here is IDEX invests in an Italian electric motorcycle company. I actually have a few family members that used to ride Ducatis. They're a super bike, absolutely love them. I have a Yamaha R6 myself. Obviously that's a Japanese bike, not Italian. But either way, I'm a big fan of Italian-made bikes. Kind of unfortunate they're going electric. I'm not really pro-electric when it comes to super bikes. I love the sound, but I guess it's inevitable. Either way though, we know that we know that almost everything with a motor is going to eventually be electrified. So there's no stopping that. And Europe's electric motorcycle market grew over 50% in 2020, mirroring the electric car market. So I think, again, this is a massive opportunity. The Italians make the best bikes in the world, and it's a very fast-growing industry. Another deal. I really like this one, guys. Now, if you're still kind of confused on what the company is, so they were founded in 2017 as a business transformation of an existing media company. IDEX has become a fintech firm through strategic acquisitions, direct investments, and joint ventures. So that's essentially the process they're using to actually grow the company. It's not like a lot of companies you've seen. It's a little bit unique, especially in the YouTube community. We don't usually talk about stocks like this. This company operates quite a bit different. However, I like it a lot. And clearly institutions are actually liking this stock too. So I think one of the reasons why institutions have been buying this stock so much lately is actually because this stock trades on the NASDAQ. A lot of penny stocks trade on the OTC. A lot of different funds are restricted from buying any stocks that trade on the OTC. It's very bullish that this trades on the NASDAQ. It's going to put a lot of smart money into the stock. And that's exactly what we've seen over the past year. We can see here it has been growing quite a bit, and obviously for a penny stock, this is very bullish. This is a very small company, so the market cap is only about $1 billion on this. just technically out of penny stock territory. The rule of thumb is basically anything under $1 billion is a penny stock. I would still treat this as a penny stock. It's a very, very speculative investment. It could pay off massively, or it could fail. I'm thinking that on a probability basis, this will perform really well, but you just gotta understand there's definitely some risk with this company. Looking at its balance sheet, so it does have 27 million cash on hand and only 20 million of debt. So it could theoretically pay off all its debt and have money left over. That's obviously a really good sign. Now, a negative to this is that I believe they're gonna have to dilute shareholders in the future. You see, the company grows through acquisitions, joint ventures, and different sources like that. They don't have enough money to really grow the company rapidly. Considering they're worth $1 billion, 27 million on hand is not going to be enough to really grow them fast. They do have a lot of deals they've already done though, and all those deals have massive growth potential. However, I think that this company is definitely going to dilute shareholders. So it's just something to keep in mind. It wouldn't necessarily scare me to buy this stock. I think it's a great stock anyways, and any penny stock you buy, it should be expected you're going to get diluted. And that's almost any growth stock for that matter. Most growth stocks are diluting shareholders almost every year. Now moving on to the last part of the video. So this company is building a Fintech Village in Connecticut. I'm going to play you guys this 1-minute clip that outlines it. I think it's a super cool concept. And if you are going to invest in this company, it's definitely something you need to know of.
And something else that's very interesting that you're working on is I understand you're building, it's kind of a campus. It's like a technology, fintech technology campus in Connecticut. Tell me about that.
Yeah, so last October we acquired a former Yukon campus in West Hartford, Connecticut. We paid about $5.25 million for it. Buildings were end of life, so we've been working through that process now. We'll be breaking ground on that in 2020. We're doing the remediation now. But we looked around globally. We have a number of investments in different countries, Israel, UK, US, China. We couldn't find a focal point for fintech. So we decided we'd go for a fairly ambitious project, which was to build our own Fintech Village. So this is going to be the first on the East Coast, a kind of Silicon Valley style campus. Where we're going to both develop the technologies we already have, and we're going to incubate some new technologies with partners as well. And the idea of doing it in Connecticut was, you know, if you're going to incubate or develop technologies for fintech, you want to do it in the front yard of financial services. So Connecticut, it's south of Boston with the big buy-side firms, the Fidelities, the Wellingtons. It's in Connecticut, so it's close to the hedge fund industry, it's close to the insurance industry, and obviously it's just north of Wall Street and the big commercial banks as well.
Okay guys, so not much thoughts on that. I just think it's a really cool concept. The two other things I wanted to cover in this video is what analysts are saying and the chart. However, there is no analysts covering the stock right now. I've looked through tip ranks, there's nothing. So I can't cover that. And I have gone through the chart myself. There's really nothing of interest to show you guys, so I'm not gonna waste your time and show you the chart. So anyways, this was just a quick overview of the company. If you want to see me deep dive into this company and actually get into the nitty-gritty research, comment down below. Let me know if you guys want to see that. But that's all I have for today's video. Hope you guys enjoyed it. Make sure to drop it a big thumbs up. Subscribe to the channel if you want to see more content like this. And I'll see you guys on the next video.